everyone. Welcome back to our channel. In today's video, we'll be diving into an important topic that affects how you are taxed in India, your residential status. Understanding this can help you navigate your taxes more effectively. So, let's get started. Please like, share the video and subscribe this channel. What is residential status? First, let's understand what residential status means. Your residential status determines which portion of your income is subject to tax in India. The Income Tax Act, 1961, classifies individuals into three categories based on their residential status: resident and ordinarily resident, resident but not ordinarily resident, non-resident. Step 1. Determining if you are a resident. To find out if you are a resident or a non-resident, you need to consider the number of days you've spent in India during a financial year. You are considered a resident if A. You have been in India for at least 182 days during the financial year, or B. You have been in India for at least 60 days during the financial year and 365 days in the 4 preceding years. If you meet either of these conditions, you are a resident. If not, you are a non-resident, NR. Step 2. Determining if you are ordinarily resident or not. Next, if you are a resident, we need to determine if you are ordinarily resident or not ordinarily resident. You are an ordinarily resident if A. You have been a resident in India for at least 2 out of the 10 preceding financial years, and B. You have been in India for at least 730 days in the 7 preceding financial years. If you don't meet either of these conditions, you are a resident but not ordinarily resident. Tax implications based on residential status. Now, let's look at how your residential status affects your taxes. Resident and ordinarily resident. Your global income is taxable in India. This includes income earned both in and outside India. You must report all foreign assets and income in your Indian tax return. Resident but not ordinarily resident. Only income earned or accrued in India is taxable. Income earned outside India is taxable only if it is derived from a business controlled or profession set up in India. Non-resident. Only income earned or accrued in India is taxable. Income earned outside India is not taxable in India. Special cases and amendments. Let's also talk about some special cases and amendments. Indian citizens working abroad. If you are an Indian citizen leaving India for employment or as a crew member of an Indian ship, you need to be in India for 182 days instead of 60 days to be considered a resident. Indian citizens and persons of Indian origin visiting India. If you are an Indian citizen or a person of Indian origin visiting India, you will be considered a resident if you stay in India for 182 days or more in a financial year. Conclusion and key takeaways. In conclusion, knowing your residential status is crucial for tax purposes as it determines the scope of your taxable income in India. Here are the key takeaways. The number of days spent in India determines your residential status. RORs have to pay tax on their global income. RNORs and NRs have different tax liabilities based on income earned in India and abroad. Always consult a tax professional or refer to the latest guidelines from the Income Tax Department of India to ensure compliance. If you found this video helpful, please give it a thumbs up, share it with others, and don't forget to subscribe to Himanshu Thakkar for more such informative content. See you in the next video.